Good morning, and thank you very much for joining us for another webinar in our Ideas for Your ISA series. Today, we're going to be turning our attention to Japan, and in just a moment, we'll be hearing from Masaki Taketsume, who has been the lead manager on the Schroder Japan Trust since July 2019. Now, before I hand things over, just a very quick word on how today's session is going to run. Masaki will start with a presentation around 25 minutes or so, where he'll walk us through the trust and share some of his views on the current market backdrop. After that, we'll move into a live Q&A session where I'll put some of your questions directly to him. So if you do have any questions, either now or as we go through the presentation, just drop them into the Q&A box on the bottom right hand of your screen, and we'll do our very best to get to as many as we can at the end. But with all that said, Masaki, it's a real pleasure to have you with us today. Over to you.
Thank you, Joe. Thank you again. My name is Masaki Taketsume, fund manager of the Schroder Japan Trust. For the next 20 to 25 minutes, I would like to touch on a couple of the topics about the Schroder Japan Trust, key features, performance, strategy and the positioning, and last but not least, outlook for the Japanese equity market. So let me start with the key features of the Schroder Japan Trust. Our approach is a bottom-up, driven by in-house fundamental research. So in other words, we are aiming to generate the alpha from the bottom-up stock selection. We have a long-term investment horizon, tend to own 60 to 70 names, and with a relatively low turnover. And as a result of the bottom-up stock selection, our portfolio typically has a style bias towards the value and the contrarian. And we also typically overweight in small cap. And as an investment trust, we are using the gearing, and the typical range is roughly 10 to 17.5%. So if we think of the performance driver of the Schroder Japan Trust, first and foremost, it's the alpha generation from the stock selection, followed by some style bias towards the value and the mid to small cap, and the gearing. So those are key performance driver of the Schroder Japan Trust. So when we talk about the bottom-up stock selection, we tend to look for the 3 to 4 type of the stock. We call it as an opportunity set. Among those opportunity set, first two opportunity set shown here are the most important driver of our bottom-up stock selection, as well as the performance of the Schroder Japan Trust. First opportunity set, we called it as a market misperception. We are looking for the company with an improving growth prospect through management effort, which are underestimated by the other investors. So in other words, we are looking for the company with the internal changes, which leads to the structural improvement in earnings prospect and or return on equity outlook. Second opportunity set, we called it as a market oversight. We are looking for the undervalued company, especially among mid to small cap category, with a strong and defendable business franchise in a niche product area. So in other words, we are looking for the niche top company, especially in the mid to small cap area. So those two opportunity sets are the most important driver of our bottom-up stock selection, as well as the overall performance of the Schroder Japan Trust. So that's the key feature of the Schroder Japan Trust. So moving to the performance, those key features have been translated into the very strong performance. So we have a very strong performance over both short term and the long term. We outperform the benchmark over the 3 months, 6 months, 1, 3, 5, and 10 years. So if we look at the performance contributor from the individual stock basis, so for example, this table shows that the top 5 contributor of the performance over the last 12 months on the top part of the table, and the top 5 detractor on the bottom side of the table. If we look at the upper table, top 5 contributor for the last 12 months, you can find the relatively unfamiliar name like a Fujikura, JX Advanced Metal, Ibiden, or Sank Engineering. So those tend to be the mid to small cap undervalued company, which we identified through our bottom-up stock selection. So even if we look at the contributor, you can find that the bottom-up stock selection is a key performance driver of the Schroder Japan Trust. And that led to the very solid both short-term and long-term track record of the outperformance. So that's the performance. Moving to the strategy and the positioning. So our overall portfolio positioning remain largely unchanged. So on the left-hand side of this chart, our portfolio has a relatively high level of the active share because we are trying to maximize the alpha generation from the bottom-up stock selection. In terms of the market cap breakdown on the right-hand side, dark blue bar is the weighting of the portfolio, and the light blue bar is the overall market. As you can see, we have a overweighting position in both mid cap and the small cap. So that reflects our style bias towards the mid to small cap as a result of the bottom-up stock selection. In terms of the overall portfolio variation, if we look at the right-hand side of the table, middle line is a overall portfolio, and the right line is the overall market. Compared to the overall market topics, our portfolio has a higher dividend yield, lower price to book, lower price to earnings, and the same level of the return on equity. So basically, our overall portfolio has a value biases. So in terms of the overall portfolio positioning, we have a high level of the active share to maximize the alpha generation from the stock selection. And our overall portfolio has a style bias towards the mid to small cap as well as a value. So in order to illustrate what we are actually doing in the current market environment, I'd like to talk about one stock example. So before start talk about the stock example, let me illustrate the current market condition. So left-hand side is an index which illustrates the level of the concentration in the market leader. So upper the line, narrower the leader. So as you can see, recently, market leadership is quite narrow. So in other words, selected number of the stock has been driving the overall market performance. So what kind of stock? So basically, those stock which met the market theme like AI or defense. So if we look at the right-hand side, dark blue line is the valuation of the Mitsubishi Heavy. So it's basically the proxy of the defense stock in Japan. So as you can see, valuation of the Mitsubishi Heavy has been devaluated strongly and led the overall market performance. So as the light blue line, it's a variation of the Advantest, which tends to be seen as a proxy stock of the AI in Japan. So same as a Mitsubishi Heavy, proxy of the defense stock, Advantest variation, proxy of the AI stock, has been devaluated for the last 24 months. So those defense or AI stock, proxy stock, has been leading the overall market performance. So that market leadership has been a bit narrow. So what we have been doing under this environment, we didn't ride on the bandwagon of to chase the performance of the proxy type of the stock, like a Mitsubishi Heavy or Advantage, both of which we do not own in our portfolio. Instead, as a bottom-up stock picker, we are always looking for the better alternative. So, for example, in the case of the generative AI theme, instead of owning the Advantage proxy high variation stock, we included a stock called JX Advanced Metal. JX Advanced Metal is a recent IPO, which was spun out from the Japanese oil company, ENEOS. So because of the IPO status or a short history as a listed company, market knowledge about this company was relatively low. As a result, when JX Advanced Metal became IPO, price to book ratio was a 1.1 time, and the price to earnings ratio was a low. So, having said that, JX Advanced Metal has a quite interesting business portfolio. So, left-hand side of the pie chart shows that the business mix of the JX Advanced Metal. So, dark blue part, so-called sputtering target. This is a material used to manufacture the chips for AI, like NVIDIA chip. And in that area, JX Advanced Metal has a 60% market share globally. So it's typical niche top company, which makes our opportunity set of the market oversight. So because of the recent IPO status, despite the strong niche top presence in the semiconductor material used to manufacture the NVIDIA chip or AMD or Intel chip, valuation of the JX Metal was far below the AI proxy stock like Advantage and far below the overall market average. So that's kind of the stock we are looking for. And when we participate in the IPO and the market gradually realize that niche top value of the JX Advanced Metal, and the share price quickly devaluated to reflect their niche top franchise in the generative AI and provide us a good alpha generation. So that's the kind of thing we are doing in terms of portfolio management. As a bottom-up stock picker, even in a thematic-driven market, we are always looking for the much better, more interesting investment idea through our bottom-up research, like a JX Advanced Metal. So that's kind of the thing we are doing. Moving to the last topics, Japan's macro background. So 3 key points. In the short term, market outlook is largely hinges on the earnings prospect, which we have a relatively positive view. So in other words, in the short term, market performance gonna be more driven by the earnings growth rather than the valuation expansion. Secondly, politics. We have a first female prime minister in the history in Japan, Miss Takaichi. And in terms of the fiscal and the monetary policy under the new Takaichi administration, we have a relatively positive view on that, so which should support the overall performance of the Japanese economy as well as the Japanese equity market for both short and mid-term. And the last but not least, Japan idiosyncratic theme or structural driver, inflation and the corporate governance improvement remains intact, which continue to support the long-term performance of the Japanese equity market. Let me elaborate each point a little bit. So first, in terms of the short-term performance, short-term market outlook, right-hand side of the chart shows that the variation of the Japanese equity market. So because of the strong market performance over the last 12 months, currently overall market variation measured by the price earnings ratio is somewhere around the 17 times, which is higher than the historical trading range. So in that sense, we don't see the much room for the further devaluation in the short term. So in other words, in the short-term market performance, it should be more driven by the earnings growth. So what about the earnings growth prospect? Left-hand side, green line is that the year-over-year earnings growth expectation for the next fiscal year, 2026. So as you can see, expectation for the next year, 2026 earnings growth hits the bottom in the middle of the 2025, and now market are expecting roughly 10% earnings growth for the 2026. I think that's fairly solid number. So in other words, even without the valuation expansion, we can expect the solid market performance along with the underlying earnings growth, which currently is expected to be the roughly 10%, double digit. So that's a short-term market outlook. So moving to the politics, what should we expect from the Ms. Takaichi or her economic policy, Sanaenomics, we call them, they called. So in terms of the Ms. Takaichi's policy, we have a relatively positive view on that. So because her target measure is well targeted or spot on. So left-hand side, this is the progress of the GDP component starting with the end of the 2012, the start of the Abenomics as a 100. As you can see, most of the economic component, export, import, private investment, public demand, has been showing the relatively solid performance. But the one area of the weakness is this light green line, private consumption. So private consumption has not yet fully recovered since the start of the Abenomics. So that's the area which economic policy should address in the short term. And that's exactly what the Ms. Sanae Takaichi is doing. So initially, she is taking some physical stimulus to support the private consumption, like a tax break or providing a subsidy to the household. So that's a good policy mix. So instead of stimulating the all component of the GDP, she is targeting to stimulate the last lagging component of the Japanese economic growth, which is the private consumption. In addition to that, from the midterm viewpoint, the current problem for the Japanese economy is a shortage of the supply capacity rather than a lack of demand. So if we look at the right-hand side of the chart, light green line is the unemployment rate. So during the Abenomics era, we had a relatively high level of the unemployment rate. But now we have a 2.5% unemployment rate, so almost full employment. So if we look at the CPI, inflation in the dark blue line, during the Abenomics era, we had a problem of the deflation because of the lack of the demand. But now we already have a 2 to 3% inflation. So we already have a good level of the inflation. So good level of the demand. So instead, we have a lack of the supply capacity. So that creates a tight supply-demand condition and result in an inflationary environment. So in other words, over the midterm, we need to see that the supply capacity expansion in the domestic economy. Exactly, Ms. Sanae Takaichi is addressing over the midterm. So Takaichi administration is providing the 1717 strategic area of the investment, where administration provides a subsidy or tax break to enhance the supply capacity and encourage the Japanese company to make an investment. So that's a pretty good policy mix under the new government. So that's why we take the new administration, Ms. Sanae Takaichi administration actively. How we are positioning our overall portfolio under new administration. So one stock example I'd like to talk, it's a company called Mitsubishi Electric. So defense spending is one of the key strategic area of the investment under the new government. So just back to our previous chart, when everyone talk about the defense, people always think of the Mitsubishi Heavy. But instead of buying the Mitsubishi Heavy, we initiate a position in the Mitsubishi Electric because this table in the left-hand side shows that basically it's a league table for the defense contract in Japan. So obviously Mitsubishi Heavy, proxy of the defense stock in Japan, they are #1 contractor. But because of that status, their price to earnings ratio is 50 times. Mitsubishi Electric is actually the top three contractor, but their valuation is half of the Mitsubishi Heavy. And they are providing a lot of a component to the Mitsubishi Heavy Industries defense business. So it's much better and a cheaper alternative to have exposure to the increase in the Japanese defense spending. So through our bottom-up research effort, so we believe that the Mitsubishi Electric is a much more interesting way to have exposure to the Japanese defense spending and generates a much stronger alpha, we believe. So that's the politics. And lastly, structural driver in Japan, corporate governance improvement and inflation, that remains intact and evolving quite nicely. So in terms of corporate governance, on the left-hand side of the chart, we continue to see that the record level of the dividend payment. Right-hand side, so are the share buyback. So despite the continuous improvement and the historical high level of the shareholder remuneration, we think there are still lots of room for the further improvement. So for example, this line chart shows that the percentage of the company with the net cash on the balance sheet. So as you can see, in the Japanese equity market, in the dark blue line, still more than 50%, 50% of the company has a net excess cash in the balance sheet compared to the US and the Europe of the 20%. So there are still lots of the dry powder to further improve the shareholder remuneration through the corporate governance improvement. So corporate governance improvement still alive and well. So in terms of the inflation, modest inflation is a positive for the Japanese equity market because corporate earnings is a nominal figure. So it's a volume growth and the pricing, inflation. That's why on the left-hand side, dark blue line is the Japanese equity market performance, which is highly correlated with the nominal GDP. Nominal GDP is the real GDP plus inflation. So as you can see from the right-hand side, recently nominal GDP, green line, is outperforming the real GDP because inflation is coming back. That providing the pricing power for the Japanese corporation to further improve the corporate earnings. So that's a strong tailwind for the, inflation is a strong tailwind for the Japanese equity market. And we don't expect the Japanese economy to move back to the deflationary environment anytime in the near future. So because people's mindset has been reset to the inflationary environment. So for example, on the left-hand side of the table, it's a consumer outlook for the price level for the next 5 years. So during the deflationary environment, 2020, only 15 or 16% of the consumer think that the price will go up significantly. But now in 2025, more than 40% of the consumers think price will go up. Inflation will stay over the next 5 years. Same as the enterprise, corporate. In 2020, dark blue line, overall average inflation expectation for the Japanese corporation is 0%. So it's a deflationary expectation. But in 2025, orange line, average price expectation for the Japanese corporation is 2%. So in other words, consumer and the corporate mindset about the price outlook, inflation, has been reset from the deflation to the inflation. So with that mindset, we don't expect the Japanese economy to go back to the deflationary environment anytime in the near future. So overall, in terms of the Japanese market outlook, in the short term, it's going to be driven by the earnings growth, which we expect to be the 10% plus, quite solid. New government, Takaichi administration, their economic policy is a quite right one to support the ongoing growth of the Japanese economy as well as the corporate earnings. And the structural driver for the Japanese equity market, corporate governance and the inflation remain alive and well and evolving in a quite positive direction. So overall, we have a positive view on the Japanese equity market as well as the Japanese economy. So that concludes my presentation, and I'm happy to take a question.
Fantastic. Thank you, Ms. Sack. I think that was a really good overview of both trust-specific opportunities, but your kind of views on the broader market environment. And I think it's safe to say there's a lot going on in Japan at the moment. So let's get stuck into some questions. I don't think we touched on it in the presentation, but I think it would be good, Ms. Sack, if you could give us some thoughts on the heightened tension in the Middle East and perhaps what you see the impact being on Japan and potentially the beneficiaries or risks in the portfolio at present.
Yeah. So in terms of the tension in the Middle East, in the short term, it may have some negative impact on the Japanese economy because the Japanese economy is highly dependent on import for the energy, including the oil and the LNG, even though Japan has some strategic reserve for the oil, roughly 250 days. So they diversify the procurement source for the LNG. So we may see some negative impact on the rising commodity price on the Japanese economy in the short term. So in terms of the overall portfolio, we don't own any stock which get direct benefit from the rising commodity price, energy prices, oil or gases. So simply because the commodity price outlook is unpredictable. But if we think of the more like a mid to long-term implication, this Middle East tension gonna lead to the rebuilding the supply chain of the energy, like oil and LNG, and the Japanese economy gonna diversify the source of the import of the energy out of the Middle East to Australia or US or South America. In that sense, Japanese trading company like Mitsui or Marubeni, both of which we own the portfolio, gonna benefit from those reconstruction of the energy supply chain because that's their business, supply chain creation. So that's their core businesses. So in that sense, our portfolio could benefit from what's happening in the Middle East right now over the midterm, we think. Yeah.
Okay. And I think it was slide 19, Sack, on the presentation, but we've had a question regarding your comments on the kind of private consumption thoughts in Japan at the moment. And given Japan's demographic situation, shrinking population or aging population, do you expect sustained growth in private consumption? And I know you mentioned Takaichi's thoughts on some subsidies or some tax cuts perhaps, but maybe a little bit more depth on how you see that playing out.
Yeah. So probably similar to the rest of the world, Japanese consumption got diversified. I mean, high-end wealthy people increase in the consumption on the back of the increase in the value of their financial asset, equity or a bond or something like that. And on the lower end, which has been suffering from the inflation, now get the support from the Takaichi administration. So high-end consumer their spending has been quite solid, and probably continue to be solid because of the tailwind from the appreciation of the financial asset holding. But the lagging area of the consumer spending, ordinary or low-income people, finally start to benefit from finally start improving their spending because of the government support. So in that sense, we expect that the overall improvement in private consumption because of the political support. So in terms of our portfolio, we own some of the department store stock, which is selling the luxury items, because spending on the high-end wealthy people remains strong, and we continue to see the solid spending by the inbound tourists because of the yen depreciation. Luxury item in Japan looks cheaper. So in terms of the improvement in the private consumption, currently we have exposure through owning the department store company called Mitsukoshi Isetan. Yeah.
And I guess kind of on stock specifics then, it would be really useful to gauge how you and the team approach selling those stocks. You know, it's been a strong period for Japan. So in terms of when stocks do well and they're successful picks, how do you and the team approach selling them or trimming them down? And then on the other side, as conviction wanes in a particular stock, perhaps, how do you and the team approach the decision to sell out of those?
Yeah. So basically, our approach is a bottom-up stock selection. So we tend to more focus on the company-specific factor to drive the share price performance of the individual stock. And there are a couple of the theses we expect to be realized to drive the performance of the stock. And we always set the price of the stock. So for example, in a case of the JX advanced metal, we talk about it. So clearly our investment thesis is this niche top value of the semiconductor material, which was underappreciated by the market. And that's gonna be, once market realizes that niche top value, share price gonna be devaluated. And that is gradually happening. But considering the still huge valuation gap, like AI proxy stock, like Advantage, whose price to earnings ratio is a 60 or 70 times compared to the JX advanced metal of the price to earnings ratio, which has been devaluated, but still less than half of that. It's still the halfway of our thesis to be realized. So once stock reaches our target price, and we believe that the market well understood that the niche top value of the JX advanced metal, we start reducing the position. So that's how we are doing that individual stock trading. Qualitatively, we decide to change the position whether our thesis reason the stock has been realized or not, and the quantitatively the variation of the is it fully valued or not. Yeah.
And I guess on that ground, then, you know, you've touched on the decision to be overweight smaller and mid-cap companies. That's where you see quite a lot of value and opportunities at the moment. Could you outline perhaps a little bit more specifically where in the small and mid-cap universe look interesting, and perhaps any examples you can draw aside from, you know, perhaps JX Advanced Metals, which you've spoken about already, but it would be good to kind of get an idea of where you're seeing the most value.
Yeah. So in terms of mid to small cap selection, we tend not to focus on any one particular sector. It's more like shown this chart in the market oversight. I mean, we are looking for the company with a strong, defendable business franchise in a niche product area. So we always a niche top company in a mid to small cap area, because if the company has a niche top franchise, they can not only realize the benefit from the growth of their underlying market, but also they have a pricing power or leverage of the pricing power, especially under the current environment in Japan. I mean, inflationary environment. If you have a niche top franchise, you have a much higher pricing power under the inflationary environment. That realize a huge leverage in their earnings. So one example we have, so for example, in a top contributor we talked, there is a number 5 company called Sankey Engineering. It's a small cap construction company specialized in electric wiring or air conditioner installment in industrial application like office or factory. And they have a niche top franchise in their market area. And as a result, they realize a huge pricing power and the gross margin has been improving significantly. And once market realize that niche top category, upside in the share price is significant. So over the last 1 year, actually, Sankey Engineering share price got almost double. So that's kind of the stock we are looking for in the mid to small cap area. Company which has a niche top franchise, but underappreciated by the market. So once market realize, we're going to see the combination of the strong earnings growth and the devaluation. Yeah.
And I guess on those low valuations, you mentioned earlier about the kind of range of gearing that you like to use, the 10 to 17.5%. Given valuations where they are, given there's escalation in the Middle East, obviously there's a bit of derating across certain sectors. How are you and the team approaching that with gearing at the moment? Are you using it to top up in areas of value, or are you keeping it fairly steady given the uncertainties?
Yeah. So in terms of our gearing policy, so basically we don't change the gearing by timing the market. I mean, so we don't call the market movement, and we don't change the gearing. Instead, we control the gearing based on the relative attractiveness of the mid to small cap category.
Okay.
So if we have a more interesting mid to small cap idea, we are using the gearing to increase the exposure to the mid to small cap category. So far, until recently, mid to small cap has been underperforming the overall market, so that our gearing level has been relatively high end of the historical range. But more very recently, for the last 12 months, performance of the mid to small cap has been catching up. So that our level of the gearing has been coming down a little bit. So that's how we are using the gearing. Yeah.
Perfect. And I think we've just got time to squeeze in one more question, Masaki, if you don't mind. We've spoken a little bit about the corporate governance reforms, and it's a pretty well-known story for those that have followed Japan. But I guess in your eyes, what do you think is the next big milestone or the next big update that we can expect regarding those reforms?
Yeah. So in terms of the next step of the corporate governance improvement, so until very recently, everyone talk about the individual effort. I mean, improving the dividend payment or improving the share buyback. But now, stage is moving to the market-wide improvement in capital allocation. So just briefly, so left-hand side is the number of the listed companies. So first time in the history, we have a less number of the listed company in Japan, because the right-hand side, there are more activity in the merger and acquisition in Japan. So it's more like a low ROE company or under-managed company has been acquired by the larger company, parent company, private equity, etc. So that's the industry or market-wide capital reallocation. So until very recently, it's a capital reallocation by individual company. Individual company make an effort to increase the capital allocation and pay out some of the excess capital to the shareholder. But now, stage is moving to the much wider range of the capital reallocation. So industry-wide, market-wide, low return, under-managed company has been taken out. So that improves the capital return, ROE of the overall market. So that could be the next step of the corporate governance improvement, and that is start happening because we have a less number of the listed company. First time in the history in Japan in the last year. Yeah.
Fantastic. Masaki, I think that's a really interesting way to wrap things up, and it brings together a lot of the themes that you've spoken about in today's presentation. But like I said, that's what we've got time for at the moment. But it's been really, really good to hear your thoughts, and a big thank you to those in the audience that have sent through some questions. Really, really good questions, really good broad range of questions there. So thank you. For those left on the call, and you would like to explore kind of more information, more detail on the trust or Masaki and his team, then they publish a really wide range of material on the Schroder's website, both on trust updates, but also broader market insights. So I really encourage you guys to go and have a look at that. But before we wrap up, just a big thank you to you, Masaki, for joining us today and sharing your insights. It's been a really, really good pleasure, and a real pleasure, sorry, to have you on the call this morning.
Great. Thanks so much. Thank you, everybody.
But yes, that does bring us to the end of today's session. We're hoping many of you will be able to join us for the last few webinars in this Ideas for Your ISA series, including another Schroder staple, which we have next week, which is the Schroder Oriental Income Trust on Tuesday, the 31st of March. But with that being said, thank you very much for joining us this morning. Take care and goodbye for now.
Thank you.